Officer, along with Atul Khanna, Chief Accounting Officer at LG India, joining in on the show right now. Gentlemen, both of you, thank you so much for your time today. Sanjay, if I could start off the conversation with you, tell me, how is the summer season shaping up throughout the country, and what is it that you're observing in various geographies?
So this year's summer season, in a one sentence, is much better than last year. And seeing India as a very tropical weather country, and in spite of there could be some variation across all region and states, but somewhere and some states are very hot, somewhere there is some problem. But otherwise, this summer season is much better. The AC penetration is much lower in India, that is 13 to 14%. A B star rating has reduced monthly electricity bill for consumers, and GST reduction has also improved the affordability of air conditioners. So this year, AC season is better. Partners have reduced their channel inventories, which due to last year cool summer they were carrying. And LG India is also doing very well for air conditioner business. In quarter 1 of this calendar year, we crossed 1 million air conditioners. And in quarter 2, which is in quarter 1 of this financial year, is still in progress. We have still not finished, but we are doing much better than last year. And it is in line with our guidance.
Atul, let me come to you and give us a sense, therefore. So you're in line to maybe slightly better placed in terms of the guidance that, that you and the company have given. What does this do to operational efficiency? Because that was going to be the crucial piece which would move the needle for FY27. Does this mean margins get maybe 100 bips better than what you were penciling in earlier? Is that something one can start to expect?
So just to answer, Harsh, about this question is that, as Sanjay ji explained very well regarding the summer season, and it doesn't mean that our air conditioner business is growing. It is growing very good pace in quarter 1 of FY27, which is a running quarter, as we have not closed as well. Whereas our other product categories also doing with very fair and good performance across, be it refrigerator, washing machine, and television. Coming to the margin front, yes, you are right that we as a long-term organization work on more on operational efficiencies, like increasing our localization rate, building our own capacities to give a more innovative products for the consumers. That too with their own insights. Our margin front definitely will improve more further. Our guidance is very clear for FY27, which would be in mid-teen digit revenue growth with a early double-digit EBITDA margin. But this is too early. It is only first quarter closing just now. There are 3 more quarters ahead. But we are very confident that we would perform much better what guidance we have given to the market.
Sanjay, would you let me try it this way? Would growth be slightly better than what you've envisaged in terms of mid-teens, just given the fact that you've got a difficult summer which has come our way and seems to be sustaining?
See, this journey is too long. Just 2 months have passed, and 2 months are giving positive demand signals, and we are growing. But we cannot commit beyond our official, outside our official disclosure about guidance. However, being a sales leader, our efforts are to cross our guidance. We will do all efforts. Things are normalizing. Consumer sentiments are positive. Confidence have back in the consumers, and the geopolitical tensions are easing out. Even the pressure on dollar and crude oil is coming down. So things are very much favorable in the market. We believe we will have much better festival season, which is coming ahead, because last year partner were impacted due to excess inventories of leftover inventories of compressor products. This year, they are entering in the season with a much more healthier inventories, and consumer excitement is back. We believe this year will be a much better year than last year, and we will be back to our previous EBITDA margin, which was a double-digit EBITDA margin, and 15% or mid-teen percent growth. If you see the past three financial year, we were delivering around 13.1% CAGR growth. So I think we will touch that or cross that. But currently, I cannot give anything beyond our official disclosure.
Sure, but that's exactly what we were looking at least a directional guidance, so to speak. But Atul, if you could just come to what exactly will LG's focus be going forward, given that the tailwinds are pretty favorable right now. Would it be market share gains, or would it be about protecting margins, because it is a very competitive space?
We as an organization always focus on our core strategy, and our core strategy for FY27 and going forward is to focus on make in India, make for India, and make India global. When we talk about market share, definitely we are the market leaders across all product categories. And when we are saying that we would be surpassing our CAGR growth, right, as Sanjay ji said, so it would always give a benefit to expand our market share. When we talk about market share, there are multiple product categories, and we are operating at almost now 30% plus market share. And our market share for air conditioners is around 17%, which is also would be increasing going forward. Vis-a-vis refrigerator, washing machine, and televisions also will increase. Our core focus going forward would, along with the domestic market, we are bringing in a lot of new products. Chest freezers we are launching just very soon, which is also a very good market for the B2B, whereas we will leverage upon our B2C strategy also to sell chest freezers in the market. And our more core focus for going forward period would be expanding our exports, which currently works on only 6%, whereas our horizon is to take to a double-digit number in a very short span of time. And for that, we are building our production capacities through Shri City expansion. And our Shri City factory implementation is well on track. So we are very much confident that they will surpass our previous CAGR growth of last 3-4 years.
Atul, on chest freezers, what's the kind of traction you're seeing? If you can just give us a brief glimpse into what you're seeing at the moment.
See, we are just about to launch this product very soon.
Right.
And we talk about the market is almost around 7% of the ref market, which will, and we were not there. So we will take that pie particularly. Just to give you an example and flavor here, we were not there in French refrigerator earlier, French door refrigerators, whereas we have launched during our last festival, Diwali. And our market share has expanded very well. We reached to a level of 14-15% in a short 6 months time. So what we can give a flavor that we are also focusing a very large number of this pie of business for chest freezers also in our portfolio going forward.
And Atul, also curious to know, how should one look at the export to the total revenue, right? You were at 6% last year. The goal is to get to double digit this year. Talk to us about the medium term, the geographies, and what the growth will likely look like.
Very good question, Harsh. So our focus, as I said, our strategy is make India global. We are building our production capacities and enhancing our production capabilities. We have already developed a premium set of products, contributing 6% currently, but we will be touching in FY27. We would be touching nearest to double digit in terms of total revenue, and it will expand our margins as well. Now, what we did is earlier we were exporting to almost 54 countries, whereas the horizon was earlier was only to low to mid product, low to mid end product supplying to Middle East, Southeast Asia, and Africa. Whereas now, currently, we are expanding our portfolio of exports to developed markets as well as emerging markets. We have already supplied, starting supplying our premium product category of refrigerators, side-by-side refrigerator and top freezers to the export market to the developed countries. Whereas also which essential series which we have launched during our IPO journey, then it is also being exported to other Middle East countries as well as Southeast Asia. So this would be a very key strategy which will expand exports going forward to maybe a level of more than 20% in a span of next, say, 3 years time to the total revenue. So our fiscal year 27 target is touching double digit our export contribution in our top line.
But Atul, I'm quite curious to know how is it that you're handling such volatility in raw materials, right? I mean, everything from crude to chips. How much of the pass-through in costs has already happened? What is consumer behavior like? And thereby, how much is still in the offing?
See, we are a very experienced company. We are there in India from last 29 years, and it is not the first time we have seen some external factors putting a short-term pressure on the profits. We saw this year a dollar movement and raw material movement, which was not in favorable. But during this time, like in past, we focused on our operational efficiencies. As Atul mentioned, we improved our localization, cost optimization did, and we focused on our premium portion of the business. We have also taken two round of price increase. The first price increase was more of structural type, where we new star rated uh, products we introduced and the new technology platform we introduced. The price increase was to manage that, and second price increase was to handle the external volatility. We believe our all steps will be taken in future and current time based on our brand value, our competitiveness of our products, and our meeting our profitable goals. One thing here I want to mention specifically, now market is gradually moving from price based competition to value technology, more AI and energy efficient products. And LG being a very strong global brand, our products are less price elastic, and consumers are not so much sensitive towards our price increase. This is favoring us. So this is also helping us to maintain strong EBITDA margin to currently and for the time to come.
Right. Okay, gentlemen, so good having you today on the show. Sanjay, Atul, great speaking with you. Thank you so much for your
Thank you
time.
very much. Thank you.
Thank you.
It's our pleasure.
Okay, very positive commentary coming in from LG India on what this summer demand is actually translating to in terms of their numbers. We'll take a very quick break on that note. When we come back, throw light on what's happening in the futures and options universe.